seconds or so and see who pops on here, but I'm super excited to be talking to you today and just hearing what's going on in the lending world with everything happening with COVID-19, as well as, you know, kind of what you're seeing here in the Bay Area market with interest rates and being able to help those that are going to be watching today with any questions that they might be having. So let's give it 30 seconds or so. We'll see if we can get any viewers, and then we'll get started with the interview.
All right, sounds good to me.
Thank you. I'm still getting used to this Facebook Live thing.
It's my first time, so yeah. Yeah.
Okay, we will go ahead and start. So for those of you who do not know Robert Imazumi, you are Vice President with Guaranteed Rate out of the San Francisco office. And oh boy, our live video has ended for some reason. That is not good. Robert, you there?
Yeah, I'm here. Can you hear me?
We totally lost the live.
Try again.
What in the world is going on with this? Oh, this is so frustrating. Okay, let's try it again. Okay, Robert, I think we're back on. We got deleted there from that last live interview.
No worries.
You still with me?
Yep.
Okay, Robert, we'll go ahead and give it another shot here. Sorry about that. So we were in the middle of an intro. Robert Imazumi, thank you so much for joining today and really just trying to help bring value and you know, facts to our audience today here on Facebook. Robert, you are Vice President with Guaranteed Rate out of the San Francisco office, and we have been working together and helping Bay Area families for, gosh, 5 years now, which is so crazy to think about. What a journey, and a really fun one. It has been just helping so many wonderful people here in the Bay Area buy and sell and refinance homes. You know, I think one thing that I love about you and why we work so well together is because we really have the same goals and values of what we want to provide to these families in this industry. So it's been a great partnership, and I'm really excited to hear what you can offer and how we can help people today with COVID-19. I know there's a lot of questions out there. So I think the first thing, just to kind of jump in and get started here, can you give us a little bit of a, you know, brief summary about, you know, your lending history and maybe a little brief summary about Guaranteed Rate and what they have to offer that might be a little bit different than some of the other lenders out there?
Of course. So I got into the mortgage industry a while back because essentially right after I bought my first house, went through the process, and the lender was terrible, lost documentation, kept on asking the same questions. And asked around, asked some other friends, and they said the same thing. I mean, lenders, there's a lot of lenders out there, a dime a dozen essentially. These big banks don't even need to be licensed essentially for a depository bank to do what I do today. And I just really wanted to kind of clean up the industry and try to help as many people as I can and provide the education as far as teaching people what loan products are actually out there for them, and not just slam everybody into like a 30-year fix when a lot of first-time homebuyers don't even stay in their house for more than 5-7 years. So that's one of my huge drives, is really just trying to educate my clients and just try to help them to figure out what's going to be the best plan for them in 2 years, 3 years, 5 years, 10 years, or even 30 years. Because when you buy a house, it's a big investment. And it's probably the biggest financial investment you're ever going to make in life. So it's very important to be educated and then know that someone's going to be on your side. So at the end of the day, Olivia and I are a team, right? You and I are what helps people get into these houses and really make their American dream, so to speak, come true with the right picket fence and such. So that's a little bit about myself. Guarantee Rate, I chose to work with Guarantee Rate. Now I think it's been about 5 years or so, because the technology that we have is second to none. Guarantee Rate came out with the first digital mortgage, so clients can do everything pretty much online, which is a huge factor in today's world, and especially today, where you don't want to be out talking, shaking hands with people when you could be in the safety of your home and your pajamas essentially, and then applying for a mortgage. The Guarantee Rate is one of the top 10 mortgage companies in the United States, and have an A+ rating with the Better Business Bureau. And that means a lot to me because I want to work for somebody that is going to actually help their clients, not just try to think of a client as a transaction and a number.
Absolutely. 100% agree. They've been a really great company. Obviously, I work directly with you and your team there, but overall, I know my clients have been really happy when they have worked with both of us together during buying a property or even for appraisals. So great to hear. Thank you for that, Robert. Tell us, I know that COVID-19 is affecting each and every one of us, and I just really love to hear about, kind of what you're seeing and how it's affecting the industry on your side. Talk to us about, turn times and appraisals and rates and all of that good stuff, and what are clients that may be watching this video today that maybe have been looking for a property in the Bay Area, or maybe just thinking about jumping into buying a property with all of this happening so quickly. Tell us what is happening and what they can be prepared to see if they are in the buy process right now.
So a lot of buyers right now are doing everything digitally, as far as trying to do the online loan applications. That's huge because that way they don't have to have contact with myself or anyone in my team. But you'll see a lot more of that going on with mortgage companies across the board, just trying to get everything as digitalized as possible. Turn times are a lot longer than they have been in the past. The main reason for that is because we saw a huge refi boom in the beginning of March and end of February. So the pipelines are just jam-packed because interest rates were at close to historic lows at that time period. So turn times are a little bit longer, but the main thing is the reason why turn times are longer is because appraisals. Appraisers, essentially, for anyone that doesn't know, there's an individual that has to come out to a property, inspect the property, do some measurements, and to make sure that the house is in good condition, and also look at comps in the area to figure out how much the value of the home is actually going to be if it's an open market. And for the most part, all appraisals in the Bay Area for jumbo loan sizes need to be appraised. And in order to do that, the inspector goes out there, inspects the property. But in this case, with all this shelter in place and COVID-19, we aren't really able to have the inspectors, or a lot of individuals don't want the inspectors to go into the house. And maybe that they've gone to 4 or 5 other houses, how they know that that person is sanitary. So what our company is doing now is we're able to get a lot of these appraisers to sign on and investors to sign off on the fact that the the inspectors can now go out to, or not actually physically go to the property. What they could do is have FaceTime or a camera or be on a video conference call of some sort with the owner of the property or with the seller or whoever the listing agent is in a buying scenario. And they're able to kind of take pictures of the property itself, each of the rooms, kind of walk through the property, you know, and kind of inspect it digitally, just like we're doing here today. So it cuts out the ability of the risk of actually somebody getting susceptible to the COVID-19 and getting sick and then passing on to family members. So that's a big thing that we're doing now. Another thing is we have what's called flash closing. So you can sign a lot of your loan documents at closing with digitally, and then all you'll have to do is sign a couple papers at closing with a notary. We do send mobile notaries out now, and what they're doing is they're essentially dropping off the packet of the documents, even leaving it at the front door. The buyer could pick up that packet, go inside, and then sign at a table close to where the notary could actually look through the window and ensure that they are signing the paperwork and they are the person that is actually buying the house. So it's kind of a workaround that we're doing now, but I think that in the future we're going to see a lot more companies do that. And Guarantee Rates actually are working on a completely full, non-touch a signing for individuals, but it's not here in California yet. It is in like about 30 states at this moment, where the individual that's buying a house does not need to have to physically meet with the notary to sign documents.
That's amazing.
Yeah, it's huge. And as far as interest rates go, with all what's happening in the industry right now, interest rates are actually on the rise. The main reason for this is because liquidity issues with investors. Nobody's wanting to buy up mortgage-backed securities and essentially put more capital into the pockets of lenders in order for them to then refinance houses. The reason for this is because the economy is kind of in the turmoil at this point a little bit. We've seen the most unemployment applications ever in the history. It's about triple or quadruple what we saw back in 2008. So there's a lot less capital. So interest rates are very volatile at the moment. And for that reason, we're seeing interest rates go higher, or a lot of investors actually back out of the market altogether.
That's so interesting, Robert, because if we talk about rates, what was it, a week or two ago, I'm sure your phone was blowing up when the media announced a 0% rate, and everyone just assumed this was for the housing market. Tell us a little bit about what occurred on your end when all of this happened, and if you could just kind of, put it into layman terms for us that really don't understand the lending world, and tell us, what did that really mean, and what does it mean now?
Okay. When that happened, was it last Monday? My phone was blowing up off the hook. Everyone calling me, people that are in contracts, say, hey, can I get that 0% rate? Doesn't quite work like that. So what the Fed did do is they did reduce the prime rate. They've done it several times now in the past month. The prime rate's now 3.25. What that affects is home equity lines of credit mainly. So it really doesn't affect first mortgage rates. What that is essentially home equity lines use the prime rate, and then they usually have a margin that the bank is going to capitalize on. So for instance, if the prime rate's 3.25, they might charge 3.25 plus 1% on top of that. So your interest rate would be 4.125 on a HELOC. That is something that's going to be variable though. And it doesn't have any effect on the actual interest rate itself, the mortgage interest rates. Mortgage interest rates are really based off of mortgage-backed securities, really supply and demand, and liquidity. So mortgage-backed securities are essentially bonds that you can buy in the open market, and it's asset-based. So it's backed by the property itself. Mortgage companies will band together, put all mortgages together. So someone that's putting 20% down on $1 million single-family home and then that has its own risk factor. And people in the open market stocks could buy up these mortgage-backed securities and drive up or down the rates. Typically, when you see a stock market crash like we've seen, then more people put money into mortgage-backed securities, which then drives down rates. But even though we're seeing that today, it's the supply and demand issue, like I kind of mentioned earlier, as far as liquidity. There's not enough assets in or capital out there to kind of fund all these mortgages that we're seeing, because the volume is about 6 times the amount we've seen in the past. So the month of March, our company did a closed volume was the first in 1 month of March was equal to the first 6 months of last year. So that's to show you how crazy it is. And then the 0% aspect, that was the Fed fund rate and the discount rate. What they did is they dropped it to actually 0.25%. And what that really does is that affects how banks are able to lend to short-term loans to other banks and figure out, and if one bank needs some money, they can lend that money to the other bank. What that does for the economy is it's supposed to boost it, because there's going to be more money liquid in the economy overall, which creates more people to spend more money. That's kind of what the stimulus package is for as well, because they're going to give money for people to pay their rents, to pay utilities, to pay for food, water, and then in turn, everybody's going to use that money and then spend it as well. So that's what boosts the economy. Because we're in a dip right now, that's why they want to boost it, and that's why they're spending trillions of dollars in order to do so. But that prime rate, the Fed fund rate, and discount rate really have zero effect on mortgages themselves, the actual mortgage rates. So it is really a common misperception, and the government really needs to kind of address that when they announce 0% discount rates, 0% prime rates. What you should see though, that's going to affect everybody in coming months is technically, since these rates are lower, they should be passing that savings on to the consumers in the form of maybe credit card interest rates reducing. So that's something that we kind of look out for. And I know there's a lot of companies, mortgage companies, and also credit card companies that you kind of reach out to right now if you're affected by COVID-19, and to try to reduce your payments or not make payments whatsoever. So you should, when you're reaching out to them in regards to that, you might want to also reach out to see if you could get your interest rate reduced on those credit cards if you have any kind of liabilities there.
Wow, that's a great tip. I know that we have a couple of people in our personal circle that have been able to defer their credit card payments for 90 days. And I've heard multiple stories now from people that all they had to do was wait on hold for about 2 hours with their current bank that they have a loan with, and they were able to defer payments 60 to 90 days as well, without any hassle, without any late charges, and really no fees. So I know every bank is doing things different, and I have heard that there's some banks that really aren't honoring anything, but I think that what we're seeing is that everybody really is trying to help as much as possible here. Good point about the interest rates, though. I think I'll make a call after this and see if I can get some lower interest rates on my credit cards.
Sounds good. Any way you can save money.
Yeah, absolutely. Is there anything else you want to add? I know that you don't have a crystal ball, but where do you see us going over the next 30 to 60 days? Do you think the interest rates are going to continue to climb?
I wish I did have a crystal ball, but unfortunately, you're right. I do not. I still feel like interest rates are kind of probably increase for a little longer, only because there is so much. There's so much volatility in the market. No one really knows when all this is going to go away and when the economy is actually going to recover. Because if someone automatically finds a cure for COVID-19 overnight and a vaccination, all of a sudden it's wiped off the planet, then everyone's going to go back to work. It'll be business as usual. So that's going to stimulate the economy. So I would say you're probably in a spot that interest rates are either going to stay the same where they are now or increase a little bit for the time being, at least until this all blows over and until everyone can kind of get their adjustment on where the market's going to be heading. for mortgage companies when they start staffing up more in order to kind of get these timelines lower, kind of figure out across the board how to get the appraisers out to the properties and kind of release those, lessen those turn times as well. But we're all in it together. We all have to be positive, stay inside, wash your hands. But I think things are going to be brighter in a couple months. It's just going to take some time.
Yeah, absolutely. Well, thank you so much for all of that, Robert. That's a huge help, and I'm sure a huge help to those that are listening today.
I have a couple questions for you.
For me, right?
Yeah. It's like I have a couple questions for you because it's even though we're in the same industry, we're on two separate spectrums. So I mean, first off, thank you so much for having me today, and then also, I mean, just knowing you and your honest opinion and really just always try to help our clients. It's always interesting to kind of pick your brain and your knowledge about what's happening on the market on your side. I mean, has COVID-19 affected the industry on your side as far as less listings? So what are you doing to kind of battle this on your front?
Yeah, no, absolutely. So I think it's just a little bit too early in the game with the COVID-19 to really have a hard fact conversation with real hard data. I think that hard data is going to really be available for us to look at and see how affected we've been with list prices and sale prices and expires and withdrawals and all of that come, mid to late April, beginning of May, when we've had a nice 30, 45, 60-day cycle to kind of get through those numbers. Obviously when all of this hit, we saw a lot of sellers withdraw properties from the MLS and just say, I'm going to take a back seat and wait for all of this to blow over and then bring my property back on when everybody's back to work and being able to obtain loans again. Believe it or not, I personally have been so busy. I have a lot of buyers that are more investment savvy, looking to purchase properties and seeing if they can, quote unquote, get that Bay Area deal right now. But for listings, I've actually signed 2 new listings just in the last 5 days. Doing it all virtual, my first time ever in 5 years working as a realtor and having Zoom calls with, sellers late at night, early in the morning, working around children's nap times, and signing listing agreements. Everybody knows that we're going to do everything we can to get the home sold. It's a really kind of an unknown right now. I have a big listing coming up in 2 weeks that we've been working really hard on, and it's going to be beautiful. And say 30, 45 days ago, before all of this hit, it would have been a slam dunk no-brainer. I have well over 20 interested buyers already waiting on the sideline to get in and see. But now not being able to get those clients into the property and only being able to do it virtual, that's going to be interesting game changer for sure. A couple of the guidelines that we do have, enforced to keep us in compliant is that even though, the federal level has brought the California real estate licensed agents as an essential, however, every county and city has their own regulations. So here in San Mateo County and in San Francisco, where I'm, working specifically, we are still shelter in place. And so we are able to show properties virtually, but we are not able to have open houses or conduct in-person showings unless it is myself only and 2 people max in that property together with me. We have to follow all the guidelines, making sure we are all 6 feet apart in the property. I wear masks when I'm in public. I wear gloves. I have bottles of hand sanitizer that I have had laying around the house for God knows how long that I'm really happy I didn't get rid of. And just, really ensuring the safety and the health of everybody is our #1 goal here. But believe it or not, even though we obviously have seen a decline in inventory, we still have active buyers out there, and we still have people who have been thinking about selling or needing to sell for one reason or another, and they're still signing listing agreements and just kind of taking one day at a time, because each day things change. I mean, as of a couple of days ago, now we're not able to go more than 5 miles from where we live, from our primary residence. And that could change tonight or tomorrow. I mean, we could be more of a mandatory stay in your home. And we just don't know where this is going to go. So, you know, the fact is that we are still moving real estate, but it is being done in a very different way. And the marketing savviness is now definitely escalated.
I can imagine. I mean, for you, you have to be out actually in there, you know, in houses, inspecting everything. I can imagine how difficult it is now. How do you think that's going to change the market as far as all this goes? You know, kind of doing virtual tours and only being able to have, you know, 1 or 2 people in the house at a time. How do you think that's going to affect listings and kind of the market and the industry long term? Do you think we're going to go to a virtual tour kind of scenario long term, or it'll get back to how things were, you know, in a couple months when this all blows over, hopefully?
I think the interesting thing, you know, that I've really been reflecting on and talking to a lot of people clear across the US, other, you know, licensed real estate agents as well, this market is so unique. It really is. The Bay Area market has always been unique, but when you look at it as a whole, I mean, the 5 years that I've been in this industry here and, you know, have very much successfully helped a lot of people buy and sell real estate, it's really been kind of just common practice to have virtual tours as part of our listing marketing plans anyways. So this isn't really something new for us. Now, if you talk to other agents outside of this area, it's very new because, believe it or not, there are some places in the US in which they don't even do professional photography for listings. And so for them, this is just a completely different conversation. For us here, this is really kind of our basic package, right? We do professional photography, we do aerial and drone video for properties, and having the 3D Matterport or the iGuide that we're doing, which is, you know, a much more kind of walking through the property and getting the feel of what it's like to be in each room and being able to measure out where your couch is going to go. You know, those are all things that we've been seeing for a long time now with most listings, not all. I think what's really going to change is now, obviously, that has to be all listings clear across the board. Every single listing that you see on the market is going to have some sort of virtual campaign. I think it will be interesting as well. One thing that we're adding into our listings is, you know, if I'm not mandatory having to be in my home, my own personal home, then I will be able to go into the property by myself and be able to do a video tour with those that may want to see it live time. You know, hey, Olivia, can you zoom in on this counter, or can you tell me a little bit more about X, Y, and Z in regards to that particular property? And so just being able to help buyers be as comfortable as possible. I think one of the biggest things we're going to see, though, is obviously we're not going to be seeing as many non-contingent offers anymore because the buyers can't get into the property and really get a feel for it while staying compliant unless they're comfortable with being there with just myself and having the 6-foot rule. So it will be interesting to see what happens, but I think we're going to see a lot more contingencies moving forward, and I think that's the right answer for everybody.
Okay. From a listing perspective, are you seeing any issues with longer turn times for financing and for the clients that are actually going to obtain a mortgage, just because the appraisal aspect that I mentioned, turn times being a little bit longer, things like that? Do you feel that, you know, now 21-day closes or less is kind of out the door and that's okay now?
Absolutely. I know that all of these sellers that are getting ready to list with me they're just being very, very easygoing when it comes to knowing that we're going to have to, again, just kind of take this one day at a time. We're going to do everything that we possibly can to get their home beautiful and market ready. But when it comes to selling the property, we need to make sure the buyers are comfortable. And if the buyers don't even have a chance to get into the property for, say, a week, maybe because the sellers are still living there, whatever the case may be, maybe it hasn't been sanitized enough, or maybe I'm not able to meet them there for personal health issues. I mean, it could be a world of different things, right, that limits us from getting people into the property. So, you know, I think that the 21-day non-contingent days are over for a moment. I don't know what's going to happen once the COVID-19 is done. Obviously, I don't have a crystal ball either, and I've never been that agent to say, I have a crystal ball and I'll tell you everything you want to hear. But I will say that I'm hopeful that once this is done and we can all get back to work, those of us that still have jobs, and around here, again, this localized market is just so different than a lot of other areas. You know, I don't have any clients that don't have jobs. They're all working remote and from home, but that's kind of been common practice here in the Bay Area for a long time anyways. So a lot of our tech workers are used to working remote. This isn't really anything new. So it will be interesting to see, and I think it really depends on how long the COVID-19 plays out for. I think if it's another 30 to 60 days, we'll be able to bounce and recover a lot faster. I think if it's longer than 60 days and the unemployment rate continues to spike and become an issue is when I think we're going to see something with the housing market that's going to be a little bit more complex to recover in a short amount of time. But for now, I think it is absolutely best practice for buyers and sellers to be prepared that offers will have contingencies and longer turn times. And I think that's just something everybody should be comfortable with right now. And it's just a respect measure as well. Everybody needs to work together here. And if somebody really loves a property and needs to move into that property, you know, the sellers need to understand that the 21-day close or even 25-day close at this time is just probably not going to be something they should be expecting.
Gotcha. That's a relief for me.
Yeah, well, you guys have enough going on in the lending world, right? So I mean, and your appraisers, you know, your appraisers need to stay safe and healthy as well. I'm really glad to hear that, you know, everybody kind of got to work really quickly and figured out the appraisal, because there was a period of time that, you know, I know that appraisals were actually put on hold completely. Yeah. It didn't last long, but it was definitely a scary couple of days for all of us because we had no idea what was going to happen. So it's really nice to know everybody's just really working together to try and make this all work for, you know, our buyers and our sellers and everybody here in the real estate market that is looking to purchase.
Awesome. Well, thank you so much for that update on your side. It's always interesting, like, again, to hear what you guys are thinking from real estate agent side when we're over here behind our desk in the lending side.
Yeah, no, absolutely. And again, I think that, you know, if we circle back in 30 or 60 days from now, obviously the hard concrete data that we'll be seeing will be substantial. I mean, right now our medium home sale prices are still above 1.5 million in the San Mateo County. And, you know, that's, you know, right on par and higher than what we saw Q1 of 2019, 2018. So we've seen that ramp up over the years. It hasn't declined, but we really don't have enough data to show what the COVID-19 is going to do to our market until we give it a little bit more time to get that data nailed in. So I think it will be interesting to see what our data charts will look like end of April, beginning of May, and to see kind of where the housing market goes.
I look forward to that. So I wish we just had that crystal ball, like you keep mentioning, to see when this is going to end, how rates are going to be, so I can just tell my clients what exactly to expect. Because the common response right now is like, we have to just wait right now because where interest rates are. As for my refinance clients, it's like, we have to wait, let's put things on hold, let's get things moving, so that way when we do see this turnaround, hopefully soon, we'll be ready to be in a position to go and lock in the rates and save you some money.
Absolutely, absolutely. And I think that anybody who's looking for investment properties, you know, anything that is vacant and that's been on the market and, you know, those sellers are motivated, it's a great time for people to be looking for investment properties as well. as long as, you know, they have a job to help with the financials, or if they're an all cash buyer, you know, that's obviously a different story. But I think investment properties, I think we're going to be seeing a lot more of those. And I think we're going to also be seeing a lot more of list price and sale price become more at a reasonable margin versus having a list price and then a substantial sale price, just simply because we can't promote the open houses and have a lot of buyers. And the sellers that are selling right now, they're being reasonable and understanding with everything that's going on, but there's obviously a reason they're selling. So we're all very much aware of that. And again, just trying to work together and ensuring that everybody's protected and staying healthy.
Exactly. Well, that's all that really matters right now. We all have to stay healthy. Let's get through this together, and then we'll see you on the other side, right?
Yes, yes, absolutely. Okay, Robert. Well, I am going to, I think, let's see. Do you have those questions in front of you that we were asked the other day by chance?
There was a question in regards to how people are able to refinance right now based off of appraisers going out, and we touched on that. Essentially, I'll just reiterate, essentially we just have the appraisers go into do virtual tours of the property. They could measure the outside of the house on their own without having to contaminate the inside of the house or vice versa. And then we'll be able to obtain that from the appraiser, the actual appraisal report with the pictures that they took from the seller's home or from the client's house, and then turn that into our underwriting for them to review. And it's very common practice now, so we've been doing it more and more often. So luckily that there is a solution to that, because like you mentioned earlier, there was about a 1 week, 2 week span where appraisers like, I can't go out until November or until April 7th. Can't do it. So
yeah, it's crazy.
Yeah.
Well, that's awesome, Robert. Thank you so much. You're always such a big help and a world of knowledge. I appreciate your time today, and I look forward to speaking with you soon after COVID-19 is behind us and we are back to work and helping as many families here in the Bay Area as possible.
Sounds like a plan. Thank you.
Thank you.